In this week's episode of the Stockscores Market Minutes, I'm going to describe what to look for in a long-term trade, what we call position trades. I'll do my analysis of the overall markets, stocks, crypto, commodity, and then we're going to look at the day trade of the week, and finally, I will show you a market scan to look for some of those long-term trades. We'll see if we can find something good for the months ahead. So how do you pick a long-term trade? Well, what I like to do is look for abnormal price action with abnormal volume on a 3-year weekly chart. Now we can market scan for those, and then once we find those stocks that have made strong gains for the week with higher than normal volume, we want to eliminate those that are already well into their upward trend. We want to find stocks that have been going sideways for a while and surprise the market with that abnormal price and volume behavior. We also want to eliminate stocks that don't have some optimism on the chart. And optimism is found with rising bottoms. I'm going to show you 3 examples in just a moment that puts this all together. We want stocks that are breaking out through resistance from low volatility with abnormal activity and optimism. What does that all mean? Let's take a look at the charts. And one of the things that will help us to find these is those stocks that have a sentiment stock score on my website, stockscores.com, a sentiment stock score of at least 60. And that is a gauge of whether the market is in the control of the buyers or in the sellers. And stocks that have a sentiment stock score greater than 60 have that buyer control. All right, let's take a look at some examples here. This is TMST, and first thing I'm going to draw on this chart is the line of resistance. You can see the abnormal price action, and just keep in mind this is a weekly chart. And you can see the very strong volume, and you can see rising bottoms. But here you have rising bottoms as well, but this is an upward trend. This is rising bottoms in a sideways trend. So we had the abnormal activity breaking through resistance from optimism, and that started the move that ultimately was a 100% move in just a few months. Let's take a look at another example. We have a few times when this happened, but the most important one I would say was this week here, when you had a strong move through resistance with volume that was higher than average, right? And the bottoms are rising, and the stock went into its upward trend. One more example. This is a Canadian listed stock. It did it a couple of times. It did it here with the abnormal activity, abnormal volume, and then again here, abnormal activity, abnormal volume. You can see the stock scores are above 60 on that green line. The blue line is our signal stock score. What we're looking really for is that sentiment stock score, the green line, to be above 60. Had the rising bottoms, broke out from what's called an ascending triangle, and that stock went into an upward trend. Now at the end of the video, we'll do a market scan. I'll show you how to run a market scan on Stockscores for Stockscores members to try and find these things. But first, let's get into our regular weekly market analysis. We'll start off with the US markets, and this is a short-term chart of the S&P 500, the 30-day, 60-minute chart. And you can see that we had a little bit of selling pressure this past week that has broken the short-term upward trend from falling tops. So that indicates the market likely to go lower in the near term. I think 428 will be the next target where the market may find some support. But what I want everyone to notice is that the volatility has picked up again. We had relatively short candles through here, low volatility, and now look at the height of those candles. Every hour, there's a lot more price action, and that indicates that investors are growing more uncertain, perhaps a little more nervous. However, when we look at the longer term trend, we are still in that upward trend line. So although the short-term trend indicates we may see a little bit more weakness in the near term, we have not yet broken the upward trend line on the weekly chart. So the overall market long-term is still healthy. Looking at the NASDAQ stocks, this is a daily chart, and you can see there that they're just right at the upward trend line. So we could break down through it. However, it is from a new high. It is not from a falling top. And so even if we broke down through this, you would expect it to try to rally back and either make a new high or make a falling top. I'll be more concerned when the market breaks down from a falling top. It has not done that yet, but still enough weakness in the last few days to warrant a little bit of caution. On the Russell 2000, it has not been in that upward trend like the Nasdaq, like the S&P. The small cap stocks have been stuck in this sideways trend, and we are nearing support in that pattern. You can see we've bounced off of it a few times. We could go down another big day or two and then hopefully bounce off of that support and stay in this sideways trending pattern. It's not a good pattern, not a bad pattern. It's a neutral pattern because we are going sideways, but we do need to hold that support level in around 210 or so on the IWM. Canadian markets, TSX had a little bit of weakness last week as well. We've seen some profit taking in oil, and that is certainly affecting the Canadian market. No breakdown, the upward trend is still intact, but a little caution is warranted. On the TSX Venture, which are those micro cap stocks in Canada, you just see that the retail investor, which tends to favor the micro cap, the small cap stocks, they are less optimistic than perhaps the institutional money is, and we're seeing selling pressure in the IWM and in the TSX Venture market. Also, support here has not been broken, but we are building falling tops, and that's an indication of pessimism. This market often gets quite quiet or even weak through the summer into the fall, and then it starts to ramp up again late October, early November. So that may be the cycle that we're going through right now on the TSX Venture. On to currencies, US dollar continues to build a nice base. I think it's more likely to go higher than lower. And the opposite can be said for Bitcoin. It is continuing to build falling tops, which is pessimism. And I think it is more likely to go lower than higher. Ethereum, another popular cryptocurrency, has come into some area of support. It should stop going down soon, but I don't see any signs that it's going to go up. And I would say that the risk to the downside exceeds the optimism to the upside. Just coming back to the sentiment stock score, you can see that the sentiment stock score went above 60 right around there mid-November last year and fell through right around there. And during that time, we had a nice move to the upside. And so you can use that sentiment stock score for the long-term trader on anything like a cryptocurrency, anything that we track on Stockscores. And this is free. You just punch in the symbols and you can see the stock scores right there. And what we want to do if you're looking for a longer term trade is make sure that that sentiment stock score is greater than 60. All right, let's move on to commodities. And there you can see gold has been quiet the last 3 or 4 weeks after that breakdown. It still hasn't recovered from the breakdown. And so I think the risk is still to the downside, but it's relatively stable right now. If we were to have a line of best fit over the last year, it's been more or less sideways. So stable, not particularly healthy. You can see the sentiment stock score has been below 60 up until just this little bit of strength there. But during that upward trend, it was primarily above 60. And that's, again, just demonstrating how that indicator works. On oil, a little bit of profit taking the last couple of weeks. However, in the grand scheme of things, the upward trend is still intact, and we can draw 2 upward trend lines. We are a bit perhaps overextended, and we could see a little more profit taking. I think that would actually be healthy, but I don't think that the story is yet over for oil. And finally, the fear chart. We had a slight bump up in fear on Friday, but nothing major. So my outlook then, bullish on both time frames, long term for bullish on both US and Canadian stocks in the long term. But in the short term, I've lowered that rating to neutral because of that weakness that we've had in the last week. Gold, neutral on both time frames. Oil, I keep it at bullish long term, but I've dropped it to neutral short term because of some short-term weakness. Stocks are seeing some profit taking on light volume in the past week, and that becomes a bit of a concern if those longer-term upward trends are broken. That has not happened yet, but it is something to watch for in the weeks ahead. Gold is relatively stable, and oil is also seeing some profit taking in that upward trend. We saw a slight rise in fear last week. All right, let's move on to the day trade of the week, an example of a stock that we would have traded in the active trader, active live service that we offer at Stockscores. You can learn more about that in the trader training menu of the Stockscores.com website. Essentially, you can watch my analysis screen as we look for something called action candles. Action candles, when we plot them in TradeStation, have a little pink dot. And looking at the chart here, you can see that. A few pink dots here at the end of the day on Thursday and on Friday. We actually found this stock a few days ago when it started to move, and then it came alive again on Friday. So it was one of the few stocks that was showing optimism this week. You can see the action candle right there breaking from some sideways trading. There was another one here, which is an even better pattern setup. That is a nice ascending triangle break. It had a nice rally into the close. Now, the economics of this trade worked really nicely. Because it's a fairly volatile stock, it did not take a very large position size to take $100 of risk, only 290 shares, which is $1,572 of capital. However, you can margin a stock like this 3-to-1, so it really only requires a little over $500 in capital. It made a $500 gain for $100 of risk. If you took $1,000 of risk, then it would have given you a $5,000 gain for basically a 95% return on that one-day hold. So nice little day trade on what was really a pretty quiet day on Friday for day traders. All right, let's take a look now at the Stockscores market scan and show you how to search for some of those longer-term trades. Now, we have to do two things for Stockscores members in order to do this. The first is to set your default chart time frame to a 3-year weekly chart. So I'm just going to jump into the Stockscores website, and you just pull up any old stock, doesn't matter what. So we'll pull up Microsoft, and I'm going to go down to the charting options tab below the chart, and I'm going to select this at a weekly interval, and we're going to make it 3 years. Now, when I do this, I only have to do it once. It sets the default chart time frame to a 3-year weekly chart, so that now when I look at charts going forward, they will all be 3-year weekly charts. Now, I then go into the market scan, and I'm going to select that tool. And again, you do have to be a Stockscores member to use this tool. You can learn more about that at the Stockscores website. And this week, what we're going to do is run the Stockscores Simple Weekly US. Now, you'll notice that there's a Canadian version and a US version. The only difference is one looks at the Canadian markets with a lower liquidity requirement, and the other the US. So we're going to run this on the US, but just for the sake of time, let's look for stocks under $20 only. And go down to the bottom. And I'm also going to increase the number of trades from 500 to 2,500. So we're focused on stocks that are more liquid. Anytime you have a preset scan, you can always modify it to adjust it to what you're looking for. There's no rules that say you have to keep it to what has been pre-built. All right, so we have 10 stocks to look at. Now what we're going to do is go through these charts, and we're going to actually do it in the large view. So I'm going to click on this slideshow button here, and we're going to make it large charts. This link down there in the bottom left, large charts. Now we've got a nice big chart time frame to look at. What we're looking for are those patterns that I showed you at the top of the video. Those breaks from low volatility through resistance. So this stock does not have low volatility. It's choppy all over the place. It had the abnormal volume. It had the abnormal price action. It was actually a pretty good day trader, swing trader last week, but not the kind of thing we want for that long-term setup. We're looking for that break from sideways trading. Now here I see a stock that's got the boring sideways trading, but given that this stock gapped up into that break and then has gone quietly sideways, my guess is that this stock is being bought by another company. You could check the news on that, but just from experience, when that kind of pattern shows itself, it's often a merger or an acquisition. Moving along to the next one, you can see the strong volume in the last 3 weeks. Right there, strong volume, good strong price action. But this is a case where this stock is not breaking from sideways trading. It is in an upward trend, okay? And here it had some sideways trading with an abnormal break. It wasn't ideal because the volume wasn't really that strong. So breaking here is not good because it's not breaking from that sideways boring pattern that we looked for before. This stock did that 3 weeks ago. I could draw a line across the tops, line across the bottoms, those of you that understand the basics of chart analysis will know that that is a pennant pattern break. So that pennant pattern 3 weeks ago has telegraphed the gains. We've gone from $8 to $10, 25% return in 2 weeks. I think it's too late now, but it's a good hold if you are in that. Go through another one. This stock is not breaking through resistance, so we pass on that. And that's the process, is you look for whether the formula that I talked about at the start of the video is there. So far, I haven't seen one. None of these stocks have broken from boring sideways trading. This one did it a few months ago. There you can see the rising bottoms, the breakthrough resistance, the abnormal price action, the abnormal volume. That was at $17. Now we're at $19. And it looks like the upward trend is still intact. It's a good stock to hold, but not a good one to buy right now. So move on to the next one. That stock is not breaking from low volatility. It did what we call a bottom fishing pattern back here. So there's a downward trend line. We've got 3 or 4 months of sideways trading, and then we had the abnormal price break right there with a spike up in volume, and the stock has been moving higher ever since. If you do these market scans every day or even just every week, you will find them. Today, we've looked through 10 charts. I don't particularly like any of these as entries today, but when you get that formula, here it is again, sideways trading, rising bottoms, breakout, upward trend. Sideways trading, rising bottoms, breakout, upward trend. It's a great little formula that, simple, but with the power of the Stockscores market scan, the sentiment stock score, and some basic chart reading techniques, you can do well with this. If you want to learn more about how to learn the intricacies of these strategies, you can do that with the investor course on the Stockscores.com website. Just go to the Stockscores.com, go to Trader Training. There's some videos there that explain all that if you want to learn a little more. Hope that you've enjoyed this week's video. If so, click that like button, subscribe to the channel, and most importantly, trade well.